heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. ARM, it's interested in Intel's product division, but Intel turns down ARM's advances.
And China stocks in the US are set for their best week since 2022.
And money is green when it comes to database and nuclear build-out. US Energy Secretary Granholm supports the US AI efforts to expand, even with foreign investment. We'll bring you her perspective. But first, we start with the latest chip story. ARM, we understand, approaching Intel about potentially buying the chip maker's product division, only to be told that the business isn't for sale, according to a source who points out that ARM didn't express interest in Intel's manufacturing operations. Now, representatives, both ARM and Intel, declined to comment. Let's break it all down. Bloomberg Intelligence senior analyst Mandeep Singh. The rationale here for a company that designs chips is what, Mandeep?
Well, so when you think about, ARM, they provide the IP blocks. They don't design or manufacture their chips. And in this case, look, Intel has a lot of IP within the company. It's tied to the x86 architecture. Obviously, ARM has a different architecture. But when you think about, Altera side or any other business that's adjacent, that's where, ARM may be interested in acquiring some of that instruction set or adjacent clients, whether it's FPGA or something along those lines. That will be my guess.
And Mandeep, we reiterate that according to this Bloomberg source, ARM's approach to Intel was rebuffed. But it's the same logic with Qualcomm, right? They've had success on ARM-based processors. Why go to x86? I note that your colleagues had interesting research overnight as well that, let's say Intel gets even deeper into distress and they start looking at options. How's ARM going to finance such a thing?
Well, look at ARM's valuation. It's trading almost 50% above Intel's market cap. And look, when you do the sum of the parts, obviously Intel has got a lot more businesses that they could divest. But in the case of ARM, their stock is currently at probably the best premium within the semi space. So it could be stock. I would imagine, it will be a buyout of some of the portion of Intel's business. So clearly we are talking about a much smaller pie within Intel that ARM is interested in. In the case of Qualcomm, they were interested, at least based on the rumors, in the bulk of Intel's business. So I think it's a different transaction if we are looking at ARM versus Qualcomm here.
And all of this, as we say, thus far has just been people familiar, particularly with the Qualcomm, as you called it, rumor, but we call reporting. I'm interested in, Mandeep, more broadly about how ARM benefits in any scenario here, or not, as the case may be. What if Intel went with a Qualcomm, for example?
Well, in the case of ARM, they are at a $4 billion run rate. When you look at NVIDIA, over $100 billion in data center revenue built on ARM design. So clearly, ARM has to find a way to expand into adjacent categories without really competing with their customers, which in this case are the likes of NVIDIA and Apple. So that's where I think the IP blocks are probably the right way for them to expand into new categories. And I don't think they're getting into design or chip manufacturing. That won't be very well received in the market.
Mandeep, Intel, 70% of revenue product, about 30% manufacturing. Away from approaches for takeover, there is a plan that Gelsinger outlined. What does Bloomberg Intelligence make of that plan?
Well, not all pieces of the plan are viable, and that's where, doing foundry manufacturing for chips that are outside of Intel is so hard because they have that, like everyone has that perception that Intel will end up competing with their customers. That's why the likes of, NVIDIA or any server chip maker, it's very hard to convince them to use Intel's fabs. So that's where the foundry business is where all the struggles are. I do think the PC business will come back because x86 still has a moat. And when there is a PC refresh cycle, that's the one part of the business that will recover nicely. So I'm betting on the PC side. We just have to figure out how to catch up on the server side. And obviously on the foundry side, they really need to partner with hyperscalers to improve the margin profile of that business.
Bloomberg intelligence analyst Mandeep Singh, thank you very much. Now, sticking with semiconductors, Tokyo Electron seeks to build a team of chip engineers in India to better ride the Modi government's push for more semiconductor manufacturing. In an exclusive interview with Bloomberg, Tokyo Electron's CEO said the company plans to hire and train local engineers in or around 2026, with their first task to provide technical services to Tata Electronics. He also spoke about where he sees AI demand going in the years to come. Listen to this.
I think the market has just crossed the threshold of the second phase of AI. Our projection is that overall chip demand will double in the next 5 years to $1 trillion in 2030, boosted by artificial intelligence, as well as augmented reality, virtual reality, and autonomous driving.
Meanwhile, Chinese equities capped their biggest weekly rally since 2008, with a burst of trading that overwhelmed the Shanghai Stock Exchange, underscoring a shift in investor sentiment. Of course, after Beijing ramped up its economic stimulus. And the shift is being felt in Chinese stocks in the US as well, where they're set for their best week since 2022. Bloomberg's Emily Grafeo joins us for more. Now, we're seeing some real risk on. Is there a FOMO trade going on here, as David Tepper's been outlining?
I think there absolutely is. But we have to remember that when you kind of zoom out here, a lot of these U.S.-listed Chinese stocks are still in negative territory on a 1, 3, and 5-year basis. Something like, BlackRock's China ETF. It's still in negative territory, but at least for this week, it's been an incredible week. And you do have David Tepper coming in saying he's going longer on China's stocks after the both monetary and fiscal stimulus. He said he's snapping up shares of Alibaba and Baidu on valuation still being low, even after these weeks, like double-digit gains in these stocks. And we also, one of the most read stories, quant hedge funds in China have shorted index futures have seen heavy losses this week. If you look at a chart of the CSI 300 index and what it's done this week, literally a horizontal line or a vertical line up, and that has really kind of hammered these quant hedge funds that have been going short these funds. But it's been an incredible week. Yeah, look
that
at
is
vertical
crazy. Look at that indeed. Bloomberg Technology loves charts. Emily Grafeo loves charts. But why is it so crazy? I mean, what is the factors behind the volatility, I guess, to the upside in this case?
Well, so earlier this week, we had kind of the Chinese government coming in finally after kind of refusing to bring in stimulus. And they brought in stimulus not just on the fiscal side, but also on the monetary side. And it continued all week. Just earlier in the week, we had seen that the Chinese central banks kind of pull back the reserve requirements for banks. So on both the monetary and the fiscal side, it was a stimulus that investors had been not seeing all year. And that's why you had seen those stock market losses all year. And now when you look at the CSI 300, the mainland shares, they've erased all the losses for the year. So it's all around been kind of investors reacting to the macro news. And now it seems like there's kind of this momentum trade as the quant hedge funds that were short get kicked out. We're seeing a little bit of a short squeeze. I mean, I think that chart just speaks for itself about the momentum. We'll have to see if it continues, because there have been some kind of like surprise rallies that don't always hold up, and the markets are off next week for the holiday. So
good point, great context. Also, context is retail investors are interesting in the Chinese space.
Yeah, and they've been crushed, at least just looking at the ETF flows. I go back to MCHI, I think that's the ticker of the BlackRock China ETF, which we've seen flows into, and oftentimes in ETF world, the flows follow the performance. So people see these big rallies and then they flow in and they kind of miss the top of that trade. So we've seen that happen in this particular ETF just over the years. And again, it's still down on the year, 2-year, 5-year basis. So even though there's a big rally today, I think a lot of investors who have been in the trade for a while are still feeling like this is not good enough.
Bloomberg's Emily Grafeo bringing us crazy charts. Thank you. Happy Friday. I want to keep the discussion going with Citi Index senior analyst Fiona Sinkota. And it's kind of simple story, right? Chinese government says stimulus. And those kind of more downtrodden consumer-facing Chinese technology companies react, particularly the ADRs. How many phone calls have you had across your desk this week about China and that corner of the market?
Huge. I mean, that's been the main story this week. It's followed on as well, obviously, from the Federal Reserve the previous week. So we've quickly swung attention over to China. And as you said, those ADRs, I mean, we've seen some phenomenal moves. Just take, for example, JD.com, that's up 34% this week, up 9% today. I mean, we've seen some really strong moves and the market's been, and investors have been keen to pick up on those, especially given the sort of downbeat move that there had been towards China prior to this week. You know, there's really had been that sense that Beijing wasn't going to get its act together to really pull out that bazooka type sized stimulus that the market was actually looking for. And this week we actually got a sense that perhaps that's actually going to be happening. That's what we've seen. I mean, the big question here, I think now is this a stabilization move, or is this something that we're going to see, you know, the Chinese authorities really support going through the rest of the year?
If you're just joining us here on Bloomberg Technology, our top tech story today is a Bloomberg report that ARM made an approach to Intel that Intel rebuffed, all according to a single source. When you woke up to that news this morning, Fiona, what was your reaction?
Well, I mean, Intel's definitely been in the news, hasn't it, this week? I mean, you know what? This is a stock that's really down in the doldrums. It's really been struggling. It's obviously been approached by several suitors, and this is just the latest. Now, I mean, it all seems a little bit murky and unknown where this might be going. As far as we know, that it's not moving forward yet. But I think, you know, if we consider what's happened to the valuation of Intel, obviously it's down in the dumps right now, and it doesn't really look like the turnaround plan is really going to do the job that it needs to. So that does mean that Intel remains vulnerable.
We're showing a long-term year-to-date chart down 52%. I want to take that step back, Fiona, because it is extraordinary that the icon, one of the icons of chip making, would ever be being discussed as an acquisition or merger target. Intel, of all names, Fiona. How much does that sharpen your investors' minds that this current move of AI is so swift, you've got to be on top of it?
Yeah, that's a really good point. And I mean, you know, if we just think about where Intel was compared to, for example, its peers, you know, it was always the riding high, the strong horseman, and that's no longer the case. And it has been a relatively rapid decline this year. As you pointed out, you know, 50% of its value lost. And at the same time, we've seen a huge rally in the valuations of those more AI-focused stocks. And so that just really highlights that point that, you know, this AI trade, it's a rapid moving one, and you have to be on the ball with it. And you know what? I think Intel's just lost the edge as far as its tech edge is concerned. It's just losing the ball there, and that really obviously hasn't helped the share price at all.
Fiona, therefore, your clients, do they want single name exposure? Do they want to be stock players in this market, stock pickers, or do they want to go broader? They don't want to have index exposure so they don't get caught out if the wind turns?
Yeah, do you know, we have seen a lot of preference towards index stocks just for indices, just for that reason, in order to be able to mitigate risk. There is always that concern of being caught out. Now, obviously, there are some favourites where our traders and our investors are sort of, you know, happy to go into the single stocks. But more broadly speaking, we have seen more of a focus on indices, and that also allows for when we sort of move towards rotations. You know, I think particularly with what's going on with China this week and what we've seen of those concerns in the US previously about sort of, you know, moving towards a potential hard landing in some cases with the weaker than expected jobs data at the start of the summer. You know, that idea that we might see rotation, if you're in an index, that does allow you to benefit from those rotations, potentially out of tech into EM assets or out of tech into, for example, more defensive stocks if we find that the data goes the wrong way.
Well, data going the right way on CPI today. Citi Index Senior Analyst Fiona Cincotta, thank you for joining us. Coming up, morale at Germany's largest company is plunging as it goes through a major restructuring plan. Details on SAP next. This is Bloomberg Technology. An internal survey shows how morale has plunged at Germany's most valuable company, SAP. Only 38% of employees have full trust in the software firm. But you'd never know it as a shareholder. Look, the stock has surged to a record high this year. Bloomberg's Jake Rudinsky joins us for more. So what is grinding on the employees, Jake?
Well, I think part of what sends shares soaring is the fact that they've got this massive restructuring plan going on at SAP that's going to affect about 1 in 10 workers. So you can imagine if you're being forced to be either retrained or potentially laid off, you'd not be thinking that the management's doing a great job. This is the lowest. We've been tracking this number for about 3 years, and this is the lowest since 2021. So it's clear that employees are quite worried about their future at SAP, despite the really high share price.
The restructuring was announced in January, and like all software companies around the world, it's a pivot to AI. I guess there might be a cultural difference between where I am in Silicon Valley and where you are in Germany and Europe. And is it stock comp? Like, if the stock is doing what we're showing on the screen, aren't the employees happy because they're going along for the ride?
Well, this is a survey of kind of the rank and file employees. So I think a lot of these guys are not really getting much in the way of compensation from the soaring share prices. So that also, I imagine, would influence how they feel about the company. Maybe you see the company's share price soaring and thinking, why am I not getting a raise?
Bloomberg's Jake Rudinsky, great to have you on from Germany. Thank you very much.
On Thursday, I caught up with Energy Secretary Jennifer Granholm in Washington at a conference hosted by the Special Competitive Studies Project. I asked her about, OpenAI CEO Sam Altman's efforts to raise a lot of money overseas for costly AI infrastructure projects in the United States, and if there should be any concerns. Here's what she had to say.
Money is green, but I do think it's important to have, what's the access, I guess, for those who are funding to very sensitive IP, right? I mean, these advanced chips are, the GPUs for AI can be used for a variety of things. And we want them to be used in the right way. And so does that mean you get access to the IP? That's a question. But we want these data centers built in the U.S., as I mentioned. So however they get funded, as long as that there's some boundaries on it, I think it's perfectly fine.
Money is green. However, I followed up by asking if there's any more regulation of AI in general needed. Here's her response.
It's about national security, but it's also about competition, right? We want to lead the world in AI, and we are, and we want it to stay that way. And so we don't want to we don't want to create constraints on that. However, we recognize that unconstrained AI could also be used in a very negative way, and so we want to channel that in the right direction.
Sticking in the realm of hardware and AI, Meta unveiled new models of its Quest headset at Meta Connect on Wednesday, but also its augmented reality glasses called Orion. I sat down with Meta's CTO, Andrew Bosworth, to discuss the technology behind those glasses and how the company plans to expand on it. Listen to this.
We already have the next 2 products in development based on the technology we developed for Orion. And we think this is just a proof of how exciting the future is going to be as these technologies become consumer ready.
You may or may not guess, though, speak to some of the team and know that that's part of the origin story. My understanding is that this is a future behavioral change that humans have to make, right? Right now I have a smartphone, I have a laptop, and that's the price point you want to come in at. One day Orion or its next generation sibling will be priced at a high-end laptop PC. What is that price point? And is, give me something here. Will I be coming back to Menlo in 10 years and finally looking at it in a consumer form? Or is it something more real than that?
Long before 10 years. I think we're more than 1 year away, less than 10 years away. But we have very clear line of sight to a consumer product. The price isn't clear to us yet. One of the big things going from a prototype like this is understanding what can we learn that allows us to simplify, or what do we need to keep in future designs, and that's going to control where the price lands. But we really want to get this into a price point, a form factor that not just consumers use it, but developers want to build for it.
The breakthrough in technology is actually in a material, silicon carbide, that allows for all of this in the lenses. How's the supply chain look like for silicon carbide for somebody that wants to do consumer tech?
Yeah, silicon carbide was the first place we looked for super high index glass that's refractive, and that's really important for what we do for these lenses. I will say it's an incredibly difficult material to produce and to work with, and so we are also looking at multiple different materials that we could use to replicate this functionality, and again, at a hopefully more competitive price point.
That was Meta CTO Andrew Bosworth.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Quick check on these markets because, well, we have had a strong week, not only for the NASDAQ and tech stocks, but also for some other risk assets. Bitcoin on fire, we're up another 5% for the week, and we're seeing basically the highest since July of this year, but we're also seeing the highest of July this year for the NASDAQ too. 3 straight weeks of gains. Move on and have a look at what ultimately the risk on action means for individual names. Looking at MicroStrategy to the higher side, unsurprisingly, with crypto moving and managing to have a really good month of September in general. PDD, extraordinary week. Biggest move on record for these ADRs, those names that are traded here in the United States, of course. Why? Well, all of that money being pumped into Chinese economy means good news for the Chinese stocks. I signal one out here. Meanwhile, Intel on the downside now, off by 0.4%, following the rest of the stocks in the chip industry more broadly, but once again being sniffed around by various competitors or frenemies in the space. This time ARM potentially analyzing and being rebuffed according to sources, but Intel currently to the lower side. Ed, what have you got?
Let's go to another top story out of Europe. Amazon's $4 billion investment pact with AI firm Anthropic was cleared by the UK's Competition and Markets Authority, which has been increasingly hawkish on big tech. Let's go out to our tech editor in London, Amy Thompson. And the CMA explained their reasoning for letting this pass. What was that reasoning, Amy?
Yeah, it was basically that Anthropic doesn't have enough of a market in the UK for them to have jurisdiction. And we've kind of seen this with a few of the cases that they've taken on, where I think they looked at Microsoft Inflection, for example, and they came to a similar conclusion. So they're having a lot of look at these big tech / AI deals, but there's not a whole lot of regulation happening, I guess.
That's a theme across here too. Amazon's investment is also being considered by the US FTC. How much is it giving these big tech companies pause?
I mean, it's part of the same concern that we've seen from regulators, not just in the UK, but in the US and Europe, about the dominance that these big tech platforms have. And the latest iteration is a concern about, I think, what the CMA called a web of connections with some of these buzzy AI startups, and whether all of these connections we're seeing, Microsoft OpenAI, Amazon Anthropic, Google Anthropic, Microsoft Inflection is hurting the market. But I don't think we've really seen anybody land a blow on big tech so far. The FTC hasn't really given an update since January. The UK's investigation into the Google Anthropic relationship, would appear to be based on the same premises as the Amazon one. The EU had to let the OpenAI Microsoft deal go as well because it didn't qualify as a merger. I don't think they've really landed a blow.
It begs the question then about the pipeline for deals, either where you are in the UK and Europe or where I am in the States. What is in the pipeline, Amy?
Oh, what is in the pipeline for deals? I mean, I think if you're a startup in Europe, for example, you're not sad to see results like this. You're happy to see big tech companies being able to come in and throw their weight around and give you billions of investment and give you some compute and give you access to chips. But it does leave us with the same problem out in the UK and Europe that we've had for a while, which is, our tech scene is still dominated by big US players.
Amy Thompson, really on top of the European tech side, we thank you. Meanwhile, Fivetran, a data movement company which helps power OpenAI's products, is announcing it just surpassed $300 million in annual recurring revenue, up from $200 million in 2023. They're also striking new deals and relationships with some key AI players. CEO of Fivetran, George Fraser, joins us now. Let's just dwell on the numbers thus far. 6,500 businesses around the world you now serve. Doing exactly what, George?
Yeah, very nice to be with you. So what Fivetran does is simple on the outside. Our customers are businesses that use tools like Salesforce, like Azure, like Oracle, like Workday, like SAP, lots of tools to run their businesses. And what Fivetran does is we gather all that data together in one place, and they're able to use it to understand what's happening in their business, how their customers are using their product, optimize supply chains, all kinds of things. But the crux of what Fivetran does is it gets all your data in one place.
And that is pretty helpful for large language models, I'm assuming. How does it benefit OpenAI?
Yeah, so OpenAI is a great Fivetran customer. They're a very comprehensive use case. We centralize data about all aspects of OpenAI's business from all kinds of data sources. And the primary thing they do with it is use it to understand how people are using their products and guide the next generation of product development.
George, which executive or leader at OpenAI did you negotiate the partnership with?
We work with a lot of people at OpenAI. We have a Slack channel with them where there is constant activity. Sometimes it's a little hard to tell, who is whose counterparty. I joke that I am the chief customer support agent of the OpenAI account. I'm in there every week. But there's a lot of people at OpenAI that we work with. I don't know who would be the one that I would name.
So the reason I ask is you explained how the sort of contractual relationship works and how the data works, but as you will have seen the reporting, Mira Murati has decided to leave and there's consideration about a transfer for a non-profit with a for-profit subsidiary to a B Corp. As a company doing business with OpenAI, what does that make you think?
I think we're going to continue to have a great relationship. I think OpenAI is a great company. I think they've had a complicated history because their product took off so explosively, unlike anything that's ever happened before. We saw it because we were replicating data for them back then. We saw their account go to the moon in data volumes. So I think it's very exciting, everything that's happening at OpenAI. There's some drama that has come with it, but I think from where I sit, the people I interact with, they're navigating it very well.
What other accounts are going to the moon, George?
Some big customers that have been growing with us a lot recently. For example, LVMH. We were just talking about what's going on in Europe a moment ago on the previous segment. So LVMH is a big customer. They're a different kind of use case. They're mostly centralizing data from ERP, from SAP in order to do supply chain optimization and things like that. But that's another great example of a big customer right now.
We've been covering that company during the show today. On your ARR growth, it's really interesting companies like yours. It's year on year quite a jump. What did you have to do to get there? A big sort of hiring effort on the sales team? What is the kind of cost of that revenue growth?
In the last year, like a lot of technology companies, the last couple of years, we have rediscovered efficient growth. And so the headcount of Fivetran has not grown a ton in the last couple of years. We've been able to grow the revenue and grow the number of customers and do more with more or less the same amount of people at the company. I think it's just it's a lot of hard work by the team. It's a lot of word of mouth out there in the market that Fivetran works. Fivetran solves what can be a very ugly problem for companies of getting their data from all these systems wrangled together. And I think that's what's driving our growth.
I was speaking to VCs, George, and a lot of them will say the hard thing is to understand how long these customers are locked in for, how repeatable this sort of growth is, to decide really where the return on AI investment is coming, George. Of this run rate, do you think it will increase at a similar sort of level?
The market for what we do is enormous. Most data centralization is do-it-yourself. It's not mostly other companies that we compete with. It's internal pipelines that people build themselves and convincing them that they don't have to do that anymore. So the total market for centralizing data in the way that we do is tens of billions of dollars. So in principle, we have the ability to grow at a high rate for decades. There are challenges. There are things we need to make better about our products. There are things we need to execute better on. But we believe that the ceiling for us is very high.
George Fraser, CEO of Fivetran, really appreciate you being here on Bloomberg Technology, doing business with some very interesting names in the world of tech. Now, coming up, our conversation with tech entrepreneur Alexis Ohanian of 776, and his latest investment is in the field of sports. Really interesting one. That's next. This is Bloomberg Technology. Alexis Ohanian, you know him as an entrepreneur, a tech titan, an investor, and now more than ever, a heavyweight in supporting female athletes. Once invested in Angel City Football Club, and now betting big on professional track and field with his company, Athlos. Here's Alexis on how Athlos aims to be lucrative for athletes.
10% of all the revenue spent for Athlos, so that's broadcast, that's tickets, that's merch, that's hot dogs, goes into a pool and is divided evenly among every one of the 36 women who lines up to compete tonight. And that's in addition to the record-breaking purse. And it's just the start. And so how long will it take? I don't know, but I believe that this sport, it's the original professional sport. This sport can and should be as big outside of the Olympics as it is during. And if we can do that, then there's no reason why we can't have purses and prizes that look as big.
Alexis, and yet track and field stars are underpaid. You know, that is kind of a commonly held belief. Yeah. And then I think about a lot of what you just touched on. So take Angel City FC. My relationship with Angel City is I have a friend that plays in the squad, Megan Reed, right? And that's how I was exposed to him. But I also was exposed through Apple TV. Mm-hmm. I don't see the same level with track and field on the streaming platforms. What does a media deal, not yet, but what does a media deal for track and field look like?
Well, I think we got phase one from our friends at Box to Box, who produced a show called Sprint that captivated us on Netflix. And when we looked at partners for Athlos, remember, today, it's just one event happening yearly. We want it to be the biggest spectacle of the sport of entertainment. You know, we got DJ D-Nice, we've got Meg Thee Stallion performing. This is going to be one of the best events any New York sports fan will have been to. That was our goal. And when we looked at streaming partners, we said, okay, this is a global sport. The fan base is everywhere. They want access, so we need to make it accessible. So we wheeled and dealed with different partners who understood that was our goal, and we were able to get to a place where, you can watch it on ESPN Plus, awesome. You can also watch it on X. You can watch it on YouTube. You can watch it on DAZN. And so access, especially globally, was so important. But again, this is still phase one. I'm going to tell you a much different story come Monday morning, because we have a re-air on ESPN2 on Sunday. Exactly the number of people who watched, who tuned in, who tweeted, who posted, who talked about it. And those are the numbers. That's the first step, is to say, look, here is the thing. What if we invested real money outside of the Olympics into one of these track events? Will people show up? Will people tune in? I think they will, because these women are no less excellent when the Olympics end. Right. And so putting them on the stage, giving them this high profile attention, I think they'll deliver.
Alexis Ohanian of 776. Now, DirecTV and Dish are said to be in advanced talks to merge in a move that would create the largest US pay TV provider. According to sources, the agreement could be announced as soon as the coming days. For more, Bloomberg Michelle Davis joins us now. Why combine 11 million subscribers on one side, 8 million on the other?
So this is a deal that's been a really long time coming. The two of these companies attempted this merger more than 20 years ago. Regulators blocked it. And it seems like now the stars or the planets are aligning for them because the world has changed so much in the past 20 years. The way that you and me view content has changed completely. It used to be 20 years ago that pay TV was the thing, cable, satellite. Now streaming, as we all know, has really taken over. And so a deal like this is really about survival for these two companies.
Michelle, reading your story, it sounds like this is close, right? Close to getting over the line, at least from a sort of deal perspective. What are you hearing about how it came together?
So, it's been an off and on situation for more than 2 decades. But there are a couple things that had to happen recently for it to be the perfect time for it to be coming soon. We're hearing that the deal could get announced as soon as Monday. Some of those things include, TPG and AT&T both own DirecTV through a JV. And as part of the deal that they struck a few years ago, there was a provision that said AT&T could not exit its 70% stake until this past summer. And now that has passed, it gives DirecTV, the corporate governance ability to do something like this. And on the Dish side, Charlie Ergen, the billionaire who controls Dish, EchoStar, he has been dealing with some issues on the debt side. He's spent a ton of money trying to buy spectrum to build out the wireless business, and he has some big debt maturities coming due. And so the view is that all of this coming together at the same time could help solve both of these problems at once.
EchoStar, TPG, AT&T, the names behind some big stakes here, do they remain committed to investing in the future business?
So everything is still in flux, but our understanding is that at this point, it does sound like the stakeholders will remain stakeholders. There might be a way for some folks to take money off the table. DirecTV does generate a lot of cash flow for AT&T and TPG, so the assumption would be they would want to keep some of that, but something like this would help them exit a bit if they wanted to.
Michelle, thanks for breaking it down. Ed, what are you looking at?
More news in today's Talking Tech. And first up, Ireland has fined Meta nearly $102 million. This after Meta notified the country's Data Protection Commission that it had, quote, inadvertently stored passwords of some users in its internal systems without encryption or protection. Plus, game developer Virtuos is set to acquire a Japanese studio in the coming months as it plans to expand its presence in the country. According to its CEO, Virtuos is in active talks with multiple studios, focusing on targets that have 100 or fewer staff, but a track record of reliability. And TikTok owner ByteDance is set to sign a $10.8 billion loan. That's according to sources. About 20 lenders comprised of international and Chinese banks are said to be funding the deal, and it would mark the largest loan in Asia on record.
Apple shares on the month continuing to outperform and avoiding volatility despite growing concern around iPhone sales growth. Now, a Bloomberg intelligence survey has found that the iPhone 16 did not excite consumers enough to warrant a smartphone supercycle, and sales growth will be just 3% year over year instead of previously projected 5%. Yesterday, analysts at Morgan Stanley and UBS both noted that iPhone 16 lead times are tracking lower than previous years. Discuss it all, Bloomberg Intelligence senior analyst Anurag Rana. Did these numbers catch you by surprise?
Yeah, I think the surprising factor was we thought it will at least match last year's refresh rate, but it declined slightly. So when you look at it and you ask people, how in the next 12 months, how many people are going to upgrade their phones? And that number is somewhere around 55%. Last year it was around 60. The year before it was up 64. So every year we are seeing a decline in that number, which means people are keeping their phone for a longer period of time. Now, whether that's driven by cost or whether that's driven by the phone being much better than previous years. But one would have thought with AI features, you could have seen a slight bump in that.
Anurag, survey data has been a big focus for Apple investors recently. Could you kindly explain the methodology of the Bloomberg Intelligence survey for the iPhone 16 and also kind of the breadth and depth of the data that you obtained?
Yeah, in this case, we go out and look at U.S. consumers and see what kind of phone are they looking to buy, whether they are looking to buy the Pro Max phone or the Pro phone, what are the reasons they want to upgrade, how many of them want to upgrade, how many of them want to switch over. And one thing was clear, whether it was Android users or Apple users, both said that they're going to keep the phone for a longer period of time. Apple Intelligence actually fell really low in the ranking of the reasons they want to upgrade. The reason still remains the same that last few years, whether it's storage, processing power, or camera, which was in line with what we were expecting. Now, one reason for this could be that we haven't really seen the software upgrade in terms of any new AI features that consumers are using. These phones are capable of doing it, but we don't have those features, and that will be launched over the next 12 months. So I think that sentiment could change as we see these features launch over the next year or so.
And that is where the tension lies. Investors looking towards the longer term adoption here, perhaps not this particular moment of frenzy outside the stores.
I agree with you, and in fact, we think next year's model is going to be a bigger upgrade, or the reason for people to upgrade, because it's going to look different, the hardware. Mark Gurman's done a very good job of telling people that iPhone 17 is where you should see some improvement in that, and hopefully by that time, we will see all the AI features launch. So those two factors, I think, would be compelling enough for Apple iPhone sales to go up dramatically.
Bloomberg Intelligence Senior Analyst Anurag Rana with an important piece of survey data. And Kara, I'm just going to reflect on something real quick, which is word of mouth. Think back to Meta Connect and Orion and the small number of people that got to see it. It might never see the light of day, but with Apple Intelligence that's not out yet, maybe seeing is believing. So when it does come out, people say, oh, I'd quite like to try that out. Maybe they go buy a new iPhone. I just always think about that in the context of tech.
I'm always questioning the demographics of who's actually playing with it as well. Is it everyone that's based in Silicon Valley versus the rest of the world? Is it men versus women? Is it young versus old? Who is actually playing with the Meta AI or ChatGPT and wanting to do it on Apple Intelligence as well? So much to debate. It's been a big week. Boy, that does it for this edition of Bloomberg Technology.
You know where to recap on the podcast and exactly where to find it. From New York and SF, this is Bloomberg Technology.